we got our first sort of voice on the show. John Stoltzfus is Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, great to have you with us here back on the program. Good morning. Thanks very much for joining us. Prashant, this side. Markets here a little up, a little down, but nerves, of course, before the election results now, which are a couple of days away. But from a global arena, with what we've seen overnight, Fed's Kashkari talking about how he'd like to wait a few more months of data before he thinks it's appropriate to dial back on interest rates. Dollar sort of strengthening a little bit, yields up about 7-8 basis points in the 10-year. What do you make of it?
Well, thanks for having me on the show. Great to be here with you tonight in New York and the morning in India. Pardon me. It's been a long day. This is the 16th hour for me. What I must say is related to the market. Coming into this year, the impression was the Fed had intimated that it planned to cut rates, or likely would, 3 times this year. We thought it would be likely to only cut 2 times at that time. And then the market thought that the Fed would cut something like 3 to 5 times. And I've even heard some people thought it would cut to 7 to 11 times. Quite frankly, I think the inflation rate is really what you need to look at. We've got sticky inflation here stateside. The Fed has now raised rates 11 times and done 7 pauses at the highest level that when it stopped raising rates on the 11th hike. So that's 18 different meetings. And effectively, they have not pushed the U.S. economy into a recession. It would appear to us that the Fed has really thus far accomplished a remarkable thing in that it has brought down inflation. In 2022, we were at 40-year highs. Inflation was almost 10%, about 9.6, I thought, thinking back then. And now we have inflation running at about 3.4%. If you look at the various indices on inflation, maybe 3.2. The idea to get to 2% is going to be tough because what you've seen is we have resilience in jobs creation. We have resilience within the consumer and resilience in business. Just looking at the earnings for the S&P 500 earnings, Q1 earnings season so far shows earnings up around 7.8%. Year over year on back of 4% revenue growth, with 8 sectors of the 11 showing positive earnings growth. And of those 8, you've got 6 showing double-digit earnings growth and only 3 sectors posting negative earnings growth. And among the sectors where you see the growth in earnings, it's mostly growth-oriented and cyclically oriented. So the Fed has its job ahead of it. But we think a lot of the drama that's being created out there, a lot of it is folks who really, when they look at this, they don't recognize the fact that we were at free money for a large part of the last 15 years because of the great financial crisis, followed by the pandemic and the effort to get supply chain going. So essentially, we're not surprised. We think it just requires a little bit of patience and diversification to come through it.
Okay, John, hi, good morning. That's been a long day for you, 16 hours and counting. I think someone needs some rest. But thank you for being with us, irrespective of such a long day. For the Indian viewer, right, what matters is whether he should top up his investments or stay cautious. How are global investors looking at India now? Because India has been a top favorite, but we've also had a steep run-up in the last 1 year. How are things looking now?
Related to India, I think that the global investor, particularly the U.S. global investor, is looking for great things coming from India in the years ahead. And beginning, it already has begun. I mean, years ago, we were working with ordinary shares and then primarily ETFs. And then we had ADRs on stocks from India. Now, what's happening is the diversification of the global supply chain away from one country centricity that we've had for over 30 years and looking for an expansion of partners, I think is terrific for India. The prospects are fabulous. From our viewpoint, I think what we're looking for as U.S. investors, we're looking for increased preparation in terms of infrastructure, training of teams of people for new operations that will be brought to India. And if anything, we think India will be the new growth stock of the Asian theater.
Hi, John. Good morning, and appreciate you staying up late for us here in India. You know, the other problem, I think, from an India investor perspective is China seems to be coming back, or maybe not. How do you read the Chinese recovery? You know, we have some statements coming in from the IMF earlier today, and they have upped their growth guidance by close to around 40 basis points. Your view, is China recovering? And is that a risk to this entire Indian stock market recovery that we've seen?
I think the issues around China, some of it is related to policy, domestic fiscal policy and direction by the government of China. And the other effect really is China seemed to have wanted to rely less on the rest of the world. It just hasn't worked out too well with the problems they have in their real estate market that they're working to change, and the problems they have demographically in the country that are challenging. That said, I think China will continue to grow, but there's plenty of room for other partners now, because the key thematic, I think, here is the diversification of the global supply chain away from one country centricity. And we would expect it would be the beneficiaries will be, we've already seen that in many ways, India, Vietnam, Korea, and Japan also. On a global basis, it'll be both emerging and developed international countries. And other ones will be Mexico, Brazil, Chile, Peru. This is a broader participation of globalization. And China certainly is in a position today in terms of its capability of manufacturing, logistics, and technology to be a worthy competitor of everyone. But it just will no longer be one road. It won't be like they used to say, all roads lead to Rome. For many years, in terms of the global supply chain, at least most roads led to China, and that centricity, we think, is being diversified, in part because COVID proved it was very impractical. It's got to be a multiplicity of partners to have a successful process of globalization. And I think China knows that itself.
Got it, John. We leave it at that. Thank you so much for joining us once again, and appreciate your time here on CNBC TV18. That's Oppenheimer Asset Management with their view. But